Pensacola. I'm 60 years old. I was born on November the 28th, 1954. I was born in Thomas Jefferson Hospital in Philadelphia, right around the corner from the Liberty Bell. And I grew up in a town called Haddonfield, New Jersey, and where my parents still live. My father passed away last year, but my mother and the rest of the family still live in southern New Jersey. And I grew up and I went to all the schools in Haddonfield. I went to Elizabeth Haddon High School, Elizabeth Haddon grade school up until 6th grade, and then I went to Central School, and then I graduated Haddonfield Memorial High School in 1973. After I graduated in 1973, I went to real estate school and insurance school at the South Jersey Professional School of Business, where I took up studies in insurance and real estate, and eventually was able to obtain my real estate salesman's license. I went to work for a company called Aldo Mignone Agency. The Aldo Mignone Agency had 3 offices selling real estate. One was in Camden, one was in Pennsauken, and the exclusive office, the nice one, was in Cherry Hill. And fortunately, I was able to get a job in the Cherry Hill office. So I sold houses in the Cherry Hill area and became friendly with the big shots in the area, especially Phil Mitch. I sold a lot of homes for Phil Mitch, who was the big broker in the Morrilton, New Jersey area. He did a lot of listing in Morrilton, Heritage Lakes, and I was the guy who sold a lot of his listings. After I had sold the real estate business for 2 years, it allowed me to go back to real estate school and to take some broker classes, which took a considerable amount of time, and I was able to pass a very difficult test and become a licensed real estate broker at a very young age. I don't remember the exact age, but I believe I was actually under the age of 21. And when I passed my test, the state of New Jersey called me on the telephone. They sent me a letter and they said, "You know that you are the youngest real estate broker ever in the history of the state of New Jersey to get a real estate broker's license." I suppose I had salesmen that were younger than me, but there had never been a broker that was younger than me. I also continued with my classes in the insurance business, studying directly under Clarence R. Stevenson, a very famous director of the South Jersey Professional School of Business, a fella, not only the director and insurance genius and teacher, but he was also an avid fisherman, and I love the water, was always a fisherman, and just loved to go fishing. And Clarence Stevenson and I became quite close fishing buddies, and we would go out on these all-night fishing trips, and we would talk business and we would talk fishing. And he said to me one evening when we were on an all-night fishing trip, he said, "Ben, why don't you open your own insurance sales business?" Because I was explaining to him that the real estate business was slow, that the FHA and the VA rates to buy a home were very high. They were up in the teens. And back in those days, when you went to buy a home and you got an FHA or VA loan, you were paying 13, 14, 15, 16. I mean, I saw rates going up into the teens. I think they may have even hit 16 and 17% interest for a 30-year loan. And not only that, but back in the old days, many people probably forget, you actually had to pay points. A point is equal to 1% of a loan. So if you bought a home for say $50,000 and put 3% down on FHA, and so you say borrowed, for argument's sake, say $48,000, you would have to pay 5, 6, or 7 points in addition to the down payment to obtain the mortgage under FHA and VA standards at the time. So getting a mortgage was not an easy proposition. Your credit had to be good. You had to have a very small down payment, which really wasn't the problem. but you had to have these points up front. And that amounted to basically a non-refundable down payment. Now, on the flip side of that coin, if for any reason you became in trouble and you couldn't afford your payments anymore, you were allowed back in those days to let someone assume your loan without qualification. In other words, if you found a buyer who was able to take over your payments, you could say, hey, look, I can't make my payments anymore to the bank. I have Joe Schmo here. I'm willing to sign the deed over to him, and he's willing to take over my payments where I left off. And there were no points. There was nothing that had to be done other than for him to fill out a simple form. There was no credit check. There was no way the bank was allowed to say no. The loan would automatically be assumed without question, and it was non-qualifying, which means they would just automatically take over the payments, and they would pay the back payments if there was a back payment due, or 2 back payments due, or 3 payments back due, or whatever. As long as they paid the back payments due, the bank would allow them automatically to take over. And quite honestly, I don't see why they did away with that law. But when I think back in history, a lot of homes that ordinarily would have gone through foreclosure were saved that way. And as a matter of fact, I was able to purchase many homes that way by catching up the payments, sending in a letter to the bank saying I'm the new owner. The lawyer would draw up a piece of paper that gave a quitclaim deed to me, and I would send a copy of it along to the bank with a cover letter that said I'm assuming the loan, my name is, my social security number is, my birth date is, and they would usually charge a $15 fee, and then they would send a new payment book to me, and then the house became mine, and I would simply take over where the other person left off. Now, I don't know how many foreclosures were avoided by having this, but it seems to me that if I were running things today, I would simply revert back to that process, and I would try to save many of these distressed homes by simply allowing whoever, without any questions asked, come in, and for a $15 takeover fee, they would simply catch up the payments and take over. It just seems like a smart thing to do right now. But in any case, the real estate business was very slow. We were in a very a deep depression, a recession at that time that was really affecting the real estate business. And so my friend Clarence, who I went fishing with, said, Ben, why don't you open up an insurance business, because in this state where you live in New Jersey, everybody has to have insurance. Of course, we knew that. And you can become their insurance agent, and it's easier to sell insurance because they have to buy it. And you can collect a 10% commission on all the policies that you write. So I said, well, who is going to hire me? And he said, if no one will hire you, you can write policies through the plan. Now, in New Jersey at the time, the politicians were imposing a lot of laws that were laws that would say if you were involved in an accident, the insurance company would have to pay all of your medical bills. They were enacting the initial phases of personal injury protection. This is going back to the very beginning days of the invention of the personal injury protection, which is commonplace now, and probably most states, if not all states, have personal injury protection, or what they call PIP. Now, the PIP was put in place, supposedly, pushed by the lawyers and congressmen, because they said that would eliminate and reduce legal fees, so there would be no argument over the medical bill if someone would become injured in a car accident. In other words, if I hit you, you hit me, everyone lands in the hospital, there wouldn't be any legal fighting between the parties over who pays what. Because if the accident were my fault, for example, my policy would have to pay your medical bill, and their policy wouldn't pay my bill if I were responsible. So what happens is the PIP took the blame game out of the equation with respect to the medical bills. And it really was a good idea, a good theory, but in the state of New Jersey where I came from, they really took it one step too far, and they made it so that when you bought a policy, you had to not only have personal injury protection on your insurance policy for every car registered, your limit, the minimum amount of insurance that you had to carry under the PIP was infinity. This is quite insane. Now you can just imagine who would be pushing for something like this. The doctors, the hospitals, even the lawyers, because they were using the PIP and the medical payments as a point of reference for how much a legal lawsuit was worth as far as the pain and suffering. Typically, a lawsuit is worth so many times the medical bill, say 3 times the medical bill. So if the medical bill is high, the lawyer would argue in court, usually in a mediation or an arbitration, that the pain and suffering amount, without a jury trial, without going to any kind of a lawsuit, in a mediation or arbitration, they would automatically receive a settlement of 3 times the medical bill. So it behooves them to have the highest possible medical bill. So the politicians and the lawyers and the doctors were all working together saying, well, let's make it so that everybody has unlimited medical insurance. So when they made the insurance requirement in the state of New Jersey back in the early 70s, they made a rule that said everybody has to have PIP, but the limit of the PIP is infinity. And the deductible under the PIP is 0. And the blame for the PIP is blameless. It means no fault. It's called no fault. So in other words, without respect to fault, you have unlimited medical insurance if you have an accident in a vehicle. You have no deductible, and you have no limit, and there is no copay. And the premium for this part of the policy at the time was about $120. And by the time I got out of the business, 15, 20 years later, it was about $157, that part of the policy for every car. I have customers, because I insured quite a few people over the years, maybe 10,000 policies by my quick calculation, who are been in serious accidents in a wheelchair even to this day, and the PIP still has to pay with 0 deductible, and there is no limit. The limit is infinity, and there's no time limit either. So there's no time limit, there is no ultimate limit, there is no deductible, there is no anything. It just pays from $1. So that particular injury would have to be paid forever. So the lawyers can take that to, I guess, what I would call the bank, and they would say, well, I've got a client here who has $1 million in medical bills, and the $1 million in medical bills would have to be paid for by the personal injury protection of whatever poor insurance company that this happened to. And so they are to this day still paying these medical bills for car wrecks that happened 10, 20, 30 years ago. And so the insurance companies all ran for their lives from the state of New Jersey. They did not want to do business in the state of New Jersey because it was an unfriendly environment to be in. They didn't want everybody to have unlimited insurance. They didn't want anybody to have unlimited insurance because in the insurance business, there is no way to underwrite an unknown or an unlimited. You could talk to any underwriter or any actuary and ask them, how do you figure out how much money I'm supposed to charge on a policy premium if you have an unknown? The unknown being an unlimited policy, or a policy that has no time limit, or a policy that could run into an issue that could be an infinite amount of money, which in essence we were selling a policy to every single person who drove down the road, an unlimited policy for the PIP, and with no blame either, which really made little sense anyway. Wouldn't have made a difference. The point is, if you're an insurance company, even the biggest insurance company in the world, and you get stuck with a quadriplegic who is going to be on the hook, on your hook, and that you have to pay for forever, the insurance company definitely doesn't want that risk. So every insurance company left this state of New Jersey. So And this happened just at the time I was getting my license and getting into the business. And Clarence Stevenson and I said, well, look, you're not going to be able to get a job with an insurance company. Aetna didn't want to write a policy. State Farm didn't want to write a policy. Liberty Mutual didn't write. All the big names, when I wrote them my resume and pleaded with them and told them that I had an office, would write back to me. They wouldn't even write back to me. They usually just ignored my resume. Even though I had built up an existing book of business through the state guarantee fund, which is what I ended up doing, insuring everybody through this fund called the auto insurance plan. So the state of New Jersey, what they did was, when all the insurance companies left, they said, my God, we're going to have to do something. We're going to have to come up with a plan to insure everyone. So they actually called it the plan. And this plan, believe it or not, was concocted in New York, in Wall Street. The home of the plan was New York, New York. Yet it controlled New Jersey. And the way it worked was, if you had an insurance license, like I did, you didn't have to qualify for a job per se, other than to have a license. So once you had the license, you would sign up to become an agent who worked as a representative of the plan. And then you were given a guidebook of the rates, and everybody's rate was the same based on, the rates were different based on where you lived and what kind of car you had and your age, whether you were male and female or married or not married, or your driving record would add a percentage extra. Depending on how bad your driving record was, there would be a percentage added on to the basic good driver rate. So if your record was really bad, you might have a 50% surcharge on top of a good driver rate, and it could go as high as 220%, I believe, was as high as it would go. And then there was a special rule that said, in the event someone has a license, driving record that is so bad that it's beyond the realm of possibility, that they could make a special petition to the plan board of directors, and they could adjust the rate accordingly. And that did happen to me once. That's a separate funny story. But once you have 12 points on your driving record, you would lose your license. So there really isn't any point that the rate shouldn't have been more than 220% more than a good driver rate. And that would be the worst it could be if you had 12 points. But believe it or not, I had customers who had 80 points on their driving license, and because they had good lawyers and they were connected to the family or whatever, they were somehow managed to continue to keep their license. And I had one fellow where they charged him $8,000 or $20,000 for the premium for a car, and somehow he still had his driver's license, and he had I don't know, 40 or 50 points in his driver's license. It still hadn't been revoked yet because he was able to pull strings or do whatever with a fancy lawyer. But anyway, make a long story short, I was able to write insurance policies, not because I was able to get a job. I made my own job by opening my own agency. I literally opened up an insurance agency out on Route 561 in Gibbsboro, New Jersey, and I prayed to God that I would do well, and I had flyers made up, little black and white flyers, and I had them 2 on each 8.5 by 11 piece of paper and cut them in half, and I put them on people's windshield wipers saying, call Ben for insurance. And believe it or not, I received enough phone calls and I gave out enough quotes through the plan, because the only place you could buy insurance was through the plan, and because the only way you could buy insurance was through the plan, I was not able to be underpriced. So in other words, if you called me for insurance, as long as you liked what I was saying and I explained the situation to you well, and I was able to explain insurance to you well and give you many choices as to what kind of coverages are available, the price for that insurance was no different with me than it would have been if you'd have called John Doe up the street, even though he had a different agency. It didn't matter because no company was writing insurance in New Jersey. As I recall, the Geico agents were very upset because they all had books of business and they were all put out of business when Geico left the state of New Jersey, and they sued and they all got a settlement. But I was not a Geico agent, and I was just coming into the business at that time. So the only book of business I had was building up a book of business in the auto insurance plan. Which, and by the way, the way that plan worked was that the insurance companies were doled out in a random fashion. So in other words, the insurance companies were being forced to take these customers. And the way that the state of New Jersey was able to force the insurance companies to take this business was by saying, look, if you don't take a piece of this business, we're going to throw you out of the state, and you're not going to be allowed to write homeowners insurance, life insurance, commercial insurance, or other lines of business unless you take a percentage of the business through the plan. So if you came to me for insurance, the way it worked was I had binding authority. You would pay me. I would give you an insurance identification card. You would be covered right away when you left my office. And then I would mail that into New York, New York. God knows why, even though we were in New Jersey, somehow we were controlled by New York, New York. And I would have to mail the application along with a check for that policy to New York, New York, and that fellow was covered. Then about 2 weeks later, we would get a little postcard back in the mail, and the postcard would say, your case for XYZ customer has been assigned to Aetna Insurance Company, or whatever company they were going to give it to, Hartford Insurance Company, let's say. So then what would happen would be about 2 weeks beyond that, you would get an actual policy in the mail that would be the same coverages and the same prices as that you quoted. And those prices were the same as anybody else could sell that policy for. So your name would be on there as agent. Every year the policy would renew. You would get a 10% commission. But no one was allowed to sell a policy for a lower price. I mean, they could if they wanted to, but they wouldn't. Every single company, literally every single company, left the state of New Jersey under those conditions because they would not write an unlimited policy, because you cannot write, as I said, the unlimited risk. So under those conditions, it was in a way interesting and made my life easy to the point that I didn't have to worry about price competition. I had to worry about selling myself and selling my services. And believe me, I was in that office every day by no later than 9:30. I opened at 9:30, sometimes there at 9, but 9:30, and I stayed open until 9 o'clock at night. I got a lot of business between 5 o'clock and 9 o'clock at night when every other agency closed at 5 o'clock, normal banking hours. So I stayed there literally from 9:30 until 9 o'clock at night. Now, in the beginning, I was writing a policy every other day, maybe once every 3 days, and then it grew to 1 a day, and 2 a day, 3 a day, and at one point it got all the way up to about 10 or 12 policies a day that I was writing. And not only that, but you would get renewals. So these policies would renew, and you would start getting checks in the mail. It was kind of a neat business, and I stayed friendly with Clarence Stevenson, and he acted as my mentor. And I thank God that Clarence was around. He was so very helpful. I fear at this point that he may not be with us anymore. I tried to call, and his school is not being run by him anymore. And they just said that he wasn't with us anymore, and they wouldn't give any more information, and his home phone number is not working. So I am very concerned that Clarence Stevenson may have left us. But if it were not for that mentoring that I had with Clarence, I never would have been able to achieve those results. Now, while I had the insurance business going, I was able to deal in the real estate business. As I told you, I passed the real estate broker's test, so I transferred my real estate broker's license from Al Dominion Agency to the Ben Cola Agency on 561, and I became a member of the FHA and the VA repo broker list. And back in those days, if you were a broker, you would receive, and if you were signed up, they would give you a key to open the lock to these houses, and they were usually all boarded shut, but there was a front key, and all people who wanted to buy an FHA or a VA repossessed home would have to buy the home through a broker. So you would have to come to me, and you would place a $100 deposit or whatever. You had to make a deposit, and then you would put the bid in, and it was a sealed bid, so you didn't know if you would win the bid or lose the bid. You would put the bid in an envelope. I would mail the envelope into the FHA VA, and then you would be notified maybe 3 weeks or a month later whether you were the winning bid. Otherwise, your deposit would be refunded. So I had the list. It was interesting because I was able to sell houses that way, doing very little work, because I had the list, and the list was published in the newspaper, but you had to still choose what broker you wanted to use to buy the home. Where today you can actually, I suppose you can actually go buy the house yourself, or you could show up at the auction yourself down at the city hall where these houses are being foreclosed on, and the bank won't allow you to catch the payments up and take over where the other person left off. And I suppose the way things are today, many of these homes are upside down, so you wouldn't want to do that. But to make a long story short, I was able to buy quite a few of these homes myself, and I had my brother Tom fixing these homes up, and we were putting roofs on them, and I didn't participate in that. I operated full-time in the insurance business, operating the Bencola agency out on 561, Highway 561 in Gibbsboro, New Jersey, and working very hard. And the paperwork load was absolutely unbelievable. And as I had part-time help, I contacted the local school system, and the high school had a program where they would pay for most of the pay for a hiree. So if I would hire a man or a woman who was a school age to come and help me, I would teach them the insurance business, usually put them to work as a clerk, an apprentice or whatever, and I would pay them, but then they would be supplemented by the government. So the government actually helped me to hire people, and strangely enough, and I'm very proud of these people who work for me, because one of them became an underwriter, and they all are, for the most part, still in the insurance business one way or another, and I had quite a few of them working for me. So they helped me, I helped them, and so I think the apprentice way of going, I think, is a good idea to help people. Right now we have a lot of people not working, and I think if we had an apprentice system going like that, it might be a good idea. But I also want to talk right now about some troubling things that are troubling, that are bothering me. Number one, thing that's bothering me are the continuous breaches of the Constitution. The Constitution of the United States, written by our founding fathers, is the basis of all law. No law is valid if it breaches or does not come up to the constitutional standards. In other words, if I am a city council, or if I am the President of the United States, or anybody, and I want to make a law, and that law goes against the constitutional rights, which, by the way, you were born with the constitutional rights. These constitutional rights that we have, the original Constitution that came from our founding fathers, the Constitution, you were born with these rights. And the rights I could think of right off the top of my head that are most important are the right to free speech. Now we see that the right to privacy, the right to own a gun, and not to have infringement with respect to owning a firearm. These rights are slowly being eroded. Actually, it seems like every day the pace is being picked up against our rights to free speech, our rights to own a gun, our rights to privacy, and now recently with the revelation of Mr. Snowden, who, by the way, had to run all the way away to Russia to escape, telling us that our telephones were all tapped. And not only that, but now he has been indicted in a court in Virginia, in federal court, for treason or whatever. Don't know exactly what he was indicted for, but he had to run away, and Vladimir Putin, thank God, has granted him asylum in Russia, and I give thumbs up to Vladimir Putin. I think he's doing a great job, and I think he's doing a great job with respect to trying to stop the fighting in the Ukraine, which incidentally, as far as I'm concerned, the Crimea belongs to Russia. They had a legitimate vote. The UN Charter says that people shall have the right to self-determination. They voted 98% to become Russian. They're better off with Russia, frankly. And Russia agreed, the Duma agreed to accept them as Russians, and they speak Russian. They were going nowhere with the Ukraine. I think the Ukraine can be an independent country, but on the other hand, I think that the United Nations pushing itself closer and closer up into the Russian Federation, along with the NATO, is just begging for trouble, because you're provoking them, you're moving closer and closer. You place missile batteries in Poland, which you're right there at the Russian border, and you're saying that these missile batteries are for protection from Iran. It's completely ridiculous. Those missiles could just as easily be aimed at Russia. And I have to admit, I have to tell you that I believe in Vladimir Putin saying that these missiles represent a threat to him. Now in the Ukraine, if the NATO takes over the Ukraine and Ukraine becomes a part of the EU, they're going to be moving more missile batteries to the southern front of the Russian Federation, and I would imagine they'll be aiming those missile batteries to the north. So Russia will be sandwiched between missile batteries in Poland aiming south and Ukrainian missile batteries aiming at Russia from the south to the north, thereby squeezing Russia right in the middle, enabling the United States a potential first attack. And when I was little growing up, we used to, once every week, sometimes every other day, we would have these drills where they were a bomb drill. In other words, we had to duck under our chair because there was a simulated nuclear attack, and they would say duck and cover, duck and cover. And in kindergarten and first grade, they used to scare the living daylights out of all of us, because they would say, we're under attack, we're under attack. The Russians are attacking, the commies are attacking. And we had to get in the hallway and line up against a certain wall. We all had to duck and put our hands over our head, because we were supposedly going to become under some kind of a nuclear attack. And it was called MAD, or Mutual Assured Destruction. I don't want the people of the earth going through this again. I don't want our children going through the MAD again, Mutual Assured Destruction. I want to see an end to these nuclear weapons, because there can be no winner in nuclear war. You would have radiation, as evidenced by what happened in Fukushima, where we were measuring elevated nuclear count all the way over here in the United States, and in fact all the way around the world. I have to take medicine now because I have my thyroid is shot, because I was irradiated from this, and I'm thousands and thousands of miles away from Fukushima. And now our press is telling us, they lied to us and frankly told us that don't worry about it. But I was not given any potassium iodide pills. Now I have to take levothyroxine for the rest of my life. My wife has to take it. My mother has to take it. My father was taking it before he died. My uncle is taking it. My brother is taking it. My sister is taking it. Everybody I know who's been tested has a slow or inactive thyroid. My thyroid was breaking apart, and I almost died of a heart attack, which later they found out was related to a thyroid illness. So, and I had to take radiation chemotherapy to kill off my thyroid. I have no thyroid now, and I have to take a pill every day, otherwise I'll die. So, why weren't we told that this radiation was in the air? The doctors told me the only way that you could get this thyroid illness is from radioactive iodine, and that radioactive iodine has a half-life of 6 to 9 days, something like that. I mean, it's 9 days, I think, is max half-life. So therefore, it may last a total of maybe a month at the most, which means that the iodine, which is the only chemical that could have hurt my thyroid, had to come from a fresh nuclear release, a fresh nuclear fission reaction. It wasn't from the bomb tests of the 1940s and the 1950s, which, by the way, we're going to talk about. That's a separate issue. But something leaked on me and leaked on my family members, and none of us were protected by radioactive potassium iodine pills. We were just left to hang out there, and we were told in the press that there is no immediate threat. Well, no immediate threat. I was laying on the floor right here. I was right here on the floor when 9/11 came, and my blood pressure hit 300 over 200. And I was holding my chest, and I thought I was having a heart attack. And then they said, no, you're not having a heart attack. We're going to take you for some tests. And they took me in the ambulance and down to the hospital. I went for a couple days, and they did some tests. They started giving me some medicine. They said, your thyroid levels are off the chart. You have thyroid cancer, and we're going to give you chemotherapy. And they gave me an injection of long-lasting radioactive iodine, the kind that lasts like 90 days. And I had to stay away from everybody, like 15 feet away from everybody for a couple of months. And it killed off the remaining cells of the thyroid that had passed through all over my body. They were in my brain, they were in my body, but these cells are all dead now, and I feel much better. I can think better. My heart rate, my blood pressure went back down. And so at this point, I am very angry. Now, what about the tens of thousands, if not millions of people in the United States, assuming that it was Fukushima that did this and not something else? I mean, I do have some doubt that this might have come from a local nuclear reactor that happens to make releases all the time. I've been keeping an eye on these reactors. We have a reactor called Port St. Lucie, and it's in the worst condition of all the nuclear reactors in the United States. And right in the days before this happened to me with my thyroid, I happened to be near the Port St. Lucie reactor, and the wind was blowing hard from that direction. I'm a sailor, and I knew which way the wind was blowing. It was blowing 20 to 30 miles an hour for days, straight from the Port St. Lucie reactor, right up the Indian River where I was sailing in the days leading up to me falling ill and thinking I had a heart attack. So it could have been that Port St. Lucie reactor. But it very well could have been Fukushima. So I don't know. Some of my relatives who live 1,000 miles away, the same thing happened to their thyroid. So it very well could be the Fukushima and not the Port St. Lucie reactor. Well, at this point, I don't have a Geiger counter, so I really don't know. But let's just get back to the Mr. Snowden here. I'm getting off track. If I were elected to a position of power, I would immediately pardon Mr. Snowden. I'm very much against the government coming down hard on these whistleblowers and saying, look, I'm sorry, but we're not going to reward you for being a whistleblower, but we're going to actually penalize you. Mr. Snowden may have been working on a secret project at the NSA where they were tapping everybody's telephone. Maybe they aren't listening live. President Obama said, no one is listening to your phone call. Well, maybe they weren't listening to your phone call. Maybe they were only tape recording it so that they could listen to it later and collecting the metadata, which means that they can go back and see who you were talking to. Now, when you collect the metadata, police do this a lot, investigations. What they'll do is they'll collect the metadata from the phone company, and they can see, they can draw a chart where they have you in the middle if they're targeting someone, and then they can have all the people that you're talking to and draw lines, and then they can pretty much see who you're talking to, and then they know who to investigate. And that's how they investigate things. And years ago, I helped the government in a criminal case that involved insurance fraud. As you may imagine, if you insured 10,000 policies and you had 1,000 claims, at one point or another, things are going to happen, and there are going to be investigations. Some of the claims are going to be fraudulent. So I did have experience, a run-in where I was asked to testify at a major hearing where some lawyers and a doctor got in a lot of trouble for submitting false claims to collect the PIP benefits. Remember, I told you they use those medical bills, the PIP benefits, to run up a big bill. And what these guys were doing, they're running up a false bill where they weren't going to the doctor, and the bill would go up and up and up, and then the lawyer would say, okay, you have 10,000 in doctor bills, so your lawsuit is worth $30,000. Without even going to court, the insurance company would pay under mandatory mediation. And these lawyers were making a killing, and when the FBI started to investigate, they started to realize that these people that were going to the doctor, when they were shown a picture of the doctor, they couldn't even recognize the photograph of the doctor that was billing thousands and thousands of dollars. The doctor is dead now. He was thrown in jail along with the others, and he's since passed away. But to make a long story short, so I've seen what this insurance fraud, these PIP taken to the extreme can do. Now in Florida, we have a version of the PIP, which is a great idea because you don't have the people arguing over the medical bill, and the medical bills are paid, and when someone shows up in the hospital after having an automobile accident, then they're assured of being paid, and that's really a good thing. I have no issue with that. But there's a limit to it. In the state of Florida, there's a $10,000 PIP limit. It's not unlimited like you had in New Jersey. I mean, can you imagine having unlimited PIP? I mean, the hospital could keep treating you, and there's no motive for them to ever finish treating you. They could treat you for whatever for the rest of your life and collect. And so it was ripe for abuse, and that's why the insurance companies ran for their lives in the state of New Jersey. Now, let's talk about Obamacare for just a minute. Back in 1990, I wrote an article in the newspaper in Daytona. It's called the Daytona Super Saver or something, I don't know. Anyway, and in Daytona I wrote an article, an editorial. It was about a half a page long, and it basically spelled out that I thought there was a genuine need for everyone in the United States to have some sort of health care. Not the kind of health care that's going to take care of you and pay your bill if you go to the doctor, but if you get sick, if you get cancer, if you end up in a situation where your bill is going to run into the thousands, I'm not talking about going to the doctor or filling a $5 prescription. I'm talking about if you end up in serious trouble and you develop cancer, you need heart surgery, you have to have a leg amputated, or you need have a kidney removed, something serious like that you would have coverage. And I recommended some kind of maybe a Canadian style system, but I believe that having a separate system where you have to buy a policy in the private sector and being forced to pay like car insurance, you buy a policy in the private sector, it's also ripe for abuse. And let me just tell you a little story how this whole Obamacare thing became a tax, because a lot of people don't know. When I was in the insurance business in New Jersey, before I sold the agency back in 1987, several years before that, the state of New Jersey was running a terrible deficit, and they didn't know what to do. So the state of New Jersey decided that they needed to impose more taxes. Now, there was a lot of inflation at the time, and the price for car insurance was going up and up and up because the PIP claims were going higher and higher and higher, and so the insurance companies were raising the rates. So what the state of New Jersey did is they came up with this thing called the plan. They changed the name from the plan to the Joint Underwriting Association. And what they did was they said, we don't want to approve a rate increase, because every year the insurance commission in the state of New Jersey was allowing the insurance companies to raise the rate. And remember, I told you the rate was the same no matter what insurance company you went to. So we all had the same rates, and so all the agents were notified, okay, the rates are going to be XYZ beginning January 1st of 1985, and then they're going to go up in 1986. And you didn't know until that year hit what the rate was going to be, but the rate surely went up every year. And when that rate went up, then your commission went up too, until we reached a point where they decided to lower the commissions. Rate would go up and then the commission would go down. Meanwhile, you had malpractice insurance was going higher, cost of staff was going higher, cost to rent the building was going higher, everything was going up, and then our real commission for selling a policy was going down. So that was agitating me there. But one day, someone at the state of New Jersey, this is the beginning of Obamacare in my opinion, decided that they needed to figure out a way of raising a lot of money. And so they said, we are going to take every single penny that comes in for car insurance, because that's a lot of money. Billions and billions of dollars are paid every year in the state of New Jersey because people had to have mandatory car insurance, and the rates are high. So the state of New Jersey said, in an effort to, quote unquote, help the people, we are going to verify, because we don't trust that the insurance companies are saying that they're losing money. Well, as a major insurance agency, and I was in the top 5 in the state, I insured enough policies that it put me in the top 5 in the state of New Jersey. So I could tell without even writing it down how much money was being paid out in claims versus how much was being taken in. And I never consciously kept a track of that, because your loss ratio really was immaterial and it didn't count one way or another for your commission. But so I focused on getting new customers. But the bottom line is, we all knew in our heart that the claims exceeded the income. In other words, the amount of premium that was being paid in was not enough to cover the claims. So the state of New Jersey was desperate. They needed money to pay their pensions and to give themselves raises. So they said, we're going to protect the people by keeping track of how much money the insurance companies take in versus how much money they pay out. Because we just enacted 10 years earlier this PIP law. Everybody has unlimited PIP. There is no deductible. There is no time limit. There is no limit. There's no copay. It's a free-for-all. If you have an accident, you've got medical coverage for life pertaining to any accident, injury resulting from that accident. So the state of New Jersey decided that they were going to, in an effort to help the people, they were going to keep track of how much money came in versus how much money went out. So guess what they did? When you paid your policy premium, now remember I told you, when you took out a policy, you didn't know if you were going to get State Farm or Liberty Mutual or Hartford or whatever. You didn't know what company you were going to get, because I insured you and I sent the application into New York, New York. Why Wall Street was in charge of New Jersey's finances, I don't know. With respect to insurance, I don't know. I could just only imagine. But in any case, the money would be sent to New York. Then the postcard would come back and you would have a company. The state of New Jersey enacted a law, and I remember standing with a great big sign in Trenton, New Jersey, the capital, because all the agents were protesting this. They were going to take all of the money, every single penny that you paid for your car insurance, and when you wrote your check out to Allstate, or you wrote your check out to State Farm, or you wrote your check out to Geico, or whoever, you didn't know it, but when you wrote that check out to the insurance company and you gave it to me, I had to write, by law, I had to write an agency check to the insurance company because the economy was bad and so many checks were bouncing that the insured could either mail a check directly to the insurance company, but any checks coming from the agency, had any money given to the agency in the form of a cash or a check or anything like that, had to be cleared by the agency, and it had to be an agency check because they knew an agency check would never bounce. If your agency check bounced, I think you'd lose your license. No agency check ever bounced in the history, I think, of the state. So, make a long story short, when you sent those checks in, the check would be deposited into the state general treasury. Now imagine, you're writing a letter, writing a check to pay your car insurance. You write on there State Farm Insurance Company. You mail in your check. Your check is taken by State Farm, stamped on the back, paid to the order of the state of New Jersey. and the state of New Jersey cashed your insurance check. Now all your insurance money is going to the state of New Jersey. That was the first form of Obamacare back in the 80s. That's how this whole thing started. That's where they came up with the idea. What happened was billions and billions of dollars over the years were collected by the state of New Jersey. Then you may want to ask, well, what happens when somebody crashes? Surely someone's going to have an accident, and oh, who they did. And all the agents knew that the amount of accidents were going to exceed the amount of premium payments coming in. We all knew that. And that's why we stood in Trenton that very cold day. 1,000 of us were standing there. And you know what? They voted, they said they weren't going to vote. The politicians, the House members said, we're not going to vote on this issue today. And we all went home, except for me and a couple of my buddies who just happened to stay there because we wanted to talk. So we were in the balcony in the back room of the State House, and we were talking. Suddenly, all the congressmen came back after the majority, the lion's share of the agents left. 99% of the agents left. And they held the vote, and it passed. And that is the beginning of the state collecting the car insurance in the state of New Jersey. So from that point on, all of the money, billions, went into the state of New Jersey, and the people didn't know. No one was told that the money went to the state of New Jersey when they paid their car insurance. Now, when there was a claim, they would send out the adjuster. So if you had State Farm insurance, they would send out your friendly State Farm insurance adjuster. And by the way, State Farm is a great company. I have dealt with every insurance company in the world. If you ever have a question about insurance, call me. I was an agent all my life in the top 5% in the state. I insured 10,000 policies. I worked inside the insurance company. I have a federal securities license, Series 6 and 63, and I also have a real estate broker's license and 4 decades. So I know all about these financial matters, and I can also, as an adjuster, I worked 2,000 insurance claims as an adjuster. So I can tell you who's good pay and who's bad pay, and I can tell you about some of their tactics, and some of them are quite nasty, and you want to stay away from some companies, and some companies you want to gravitate toward. So please, if you have a question about insurance, call me. My phone number is 407-463-2700. That's 407-463-2700. I have no problem talking to you about insurance. I'm very knowledgeable. I'm an all lines agent and adjuster, and I could tell you who to deal with and who to stay away from. But in any case, let's say you're dealing with State Farm and they send out their State Farm adjuster. What they would do is they would write out a check to fix your car. Let's say you hit a tree, so now you have a collision claim, full coverage, and your car is at the body shop. He'd write out a check, but the check was drawn against the state fund. So now, even though it said State Farm on the top, the account number at the bottom went to the state. So now the state had money had to come out of the state account. Well, as you may imagine, that sucker went into the red. It went $4 billion into the red. I was so upset because they were lowering our commission in an effort to help stabilize this thing. Every year they were lowering our commission. And I just didn't like the idea that these people's money was being held by the state of New Jersey, and the state of New Jersey was funding its servants. I call them servants, not officials. There's no such thing as a government official. They're called servants as far as I'm concerned. They're all servants. But to make a long story short, these people, had a terrible deficit, and so they were charging, they would pay the claim from the fund. Now guess how much money the state of New Jersey took off the account, the gross proceeds from the account. Remember, I told you all the money was being paid into the account. Now it's time to pay out when you wrap your car around a tree, but the check drawn on the account to pay your claim was drawn against the state treasury account. It went $4 billion into the red. And I guess they had to sell bonds or something like that to pay for it. But things got so bad that you were not allowed to leave the state of New Jersey. When I left the state of New Jersey, I had to pay insurance to the state of New Jersey for 3 years. After I moved to Florida, There was nothing wrong with my driver's license, but I had been insured through this plan. It was the only way you could buy insurance. And so for 3 years, if I didn't pay my New Jersey car insurance, even though I lived in Ormond Beach, Florida, and I had a legitimate home, and I had no home anymore in New Jersey, and I had a New Jersey driver's license, and my car was new car I bought in Florida was registered in Florida. Everything was Florida, nothing New Jersey anymore. I received a letter in the mail from Florida that said your driver's license has been revoked. I called the state of Florida up, and they said, well, you were revoked because New Jersey revoked you, so we had to revoke you. It has something to do with insurance. So I called New Jersey up, and they said, well, you didn't pay your car insurance. So I advised New Jersey. I turned my license in. As a matter of fact, they cut it up in Florida. When I came to Florida, and once I passed my test, they cut my license, my New Jersey license, in half with a pair of scissors. And from then on, I had Florida insurance and a Florida tag, and I had Florida driver's license and everything. But for 3 years, I had to pay my car insurance in the state of New Jersey, even though I had no car. That's how desperate they were. Otherwise, they would revoke your driver's license in New Jersey, and that would revoke your Florida license. Now, believe it or not, for this service to keep track of how much money was coming and going, the state of New Jersey kept 20% of all the money. Can you imagine? Because the only thing the state of New Jersey did was to say, okay, we collected, say, $3 billion or $4 billion in premium this year. And then they would just take 20% of the money as a tax. And they said they were doing that in an effort to determine how much money was coming in versus how much money was going out. And then they kept 20% of the money as a tax, and that was their service fee to determine whether or not the insurance companies were lying about how much money was coming in and how much money was going out. So you see, New Jersey used car insurance as a way of taxing people without telling them. They took 20% of everybody's money. And I think that whole thing is probably still winding down even to this day. Here we are decades later, but it got so far into the red that they borrowed deeply to pay off the claims. And the poor people that moved to Florida had to pay their car insurance in New Jersey for 3 years. And 20%, people don't even know that 20% of all their car insurance premium for their own good went to the state of New Jersey as a tax. It wasn't listed on their policy. No one ever told them, but 20% of all of your car insurance premium went to the state of New Jersey. And you know what? That's what Obamacare is. That's exactly what Obamacare is. It's a health insurance version of the New Jersey Car Insurance Joint Underwriting Association, or auto insurance plan, whatever you want to call it. It's a total tax scam. And this is treason as far as I'm concerned. Not having a balanced budget is treason. And you'll notice that we have now, if you watch the web and some of these back channels, you'll see that a lot of FEMA camps were built. Well, we're going to take some of these people who are committing treason, listening on your phone calls, violating your civil rights, your right to own a gun, you're infringing on your right to own a gun, infringing on your right to speech, infringing on your privacy. These are major treason violations. And we are going to have a new set of rules called mandatory drug sentencing rules. Only instead of mandatory drug sentencing rules, we're going to have mandatory constitutional violation rules. Civil rights violation, mandatory sentencing, where the judge can't say, I'm sorry, you've got a good record. You're going to jail for a certain number of years depending on what you do. And you break the Constitution and you work for the government, you are going down big time. And if anybody whistleblows on you, they're going to get a reward. Instead of them being thrown in jail, the whistleblower is going to get a reward, and the person who committed the crime is going down on a mandatory sentence. And these people who are in jail on these mandatory drug sentencing things, if they're nonviolent and they're personal use of drugs, we're going to use the cells that they're in. Forget that. We're going to use the FEMA camp, because I have a feeling there are going to be so many of these public servants that are going to need a FEMA camp to put them in. We're going to put these public servants in FEMA camps, the ones who have violated the civil rights of the people. And so that'll be the end of my introduction. My name again is Ben Cola. Thank you very much.